Welcome back, students. This is Dr. Mercado speaking. This is Accounting 1329, Payroll and Business Tax Accounting, and we are continuing covering the content in Chapter 3, which deals with Social Security taxes. Okay, please make sure that you complete all of your weekly assignments on time. It is imperative that you complete your assignments. 2 attempts are provided, and I always keep the highest grade earned. This is a great opportunity for you to practice and identify the areas that you are struggling with so we can work on improving on those areas. Okay, if you have any questions or concerns, please do not hesitate to contact me. That way we can get all of your questions clarified and you can be prepared for your exams. Okay, now in this particular lecture we are going to continue covering problems from chapter 3. The exercise that I'm going to be covering is exercise 3-6A. Let me jump over to it. Okay, once again I have set it up in Excel. That way my calculations are a lot easier to be done and I don't have to rely on a calculator. I can just do my formulas within the actual spreadsheet itself, and also because it's just more efficient to do it. Okay, so the problem reads: Audrey Martin and Beth James are partners in the country gift shop. That is very important. They are partners, okay, which employs the individuals listed below. Paychecks are distributed every Friday to all employees. Based on the information given, compute the amounts listed below for weekly payroll period. Now, here they're talking about two partners. Okay, we have two partners, Audrey and Beth. Okay, let me just go ahead and mark that off. Okay, so we have partners. That we have two partners. Now down here I'm going to make a little note. Okay, per the information provided in chapter 2, this is why it's very important. We're going to be using the information from prior chapters. Per the information provided in chapter 2, we identified that partners are not employees of the partnership. That was included in chapter 2. Okay, rather the money received by partners is considered a drawing or withdrawal from the business. Okay, so if I'm a partner and I'm taking out specific amounts of money each week, that is not salary. Okay, if you're a partner of the partnership, then that's not considered wages. Okay, that's considered a withdrawal from the business. Okay, so that's very important because what's happening here? They included Audrey and Beth as they're getting a salary of $9.50 per week. Okay, when Audrey and Beth are not employees of the partnership, they're the partners, so they're not considered employees. Okay, so let's work on the calculations. I've copied the information from what was provided over here so we could do our calculations. Once again, it's important to note that your OASDI tax is 6.2%. Your HI tax is 1.45%. Okay, so we're going to do the same thing that we did last time. In the last problem we did, the first thing we're going to do is we're going to identify how much is taxable for OASDI tax purposes. Well, in this particular problem, the cap or the base does not really matter, but it's important for us to talk about it. Okay, remember, for OASDI, we only pay taxes on the first $137,700. Okay, anything above that, we don't pay any more taxes on it. So if that were the case, then your taxable earnings would be impacted because maybe you've already made $136,000 and then you're making an extra $2,000. Part of that money will not be taxable. Okay, in this particular problem, that does not apply. But you do need to know that there is a cap for the amount of tax to be paid for OASDI tax purposes. And that cap is the first $137,700 of earnings as of 2020. The 2021 figures had not been published as of the date that the textbook was published, so we're a little bit behind. But that is the number that we're running with, $137,700. So in this case, that information does not apply because I don't know how much this employee has made year to date. I need their year-to-date information to be able to say, okay, they're getting close to the cap, or they're just, they're not going to even get halfway there. Okay, so what are we going to do? Well, your OASDI taxable earnings is going to be your salary. Okay, so I've got $700. I've got $29.80, $485. Okay, now this is where it gets tricky. Okay, what did we say about Audrey and Beth? These are partners. Okay, so are the $950 that they receive every week, are those wages? No, according to chapter 2, whatever the partner takes out of the business, that is not considered, salary. That is considered a withdrawal. Okay, so for taxable purposes, that will be 0. Okay, they're not going to pay any taxes on it because it's not salary that they earned. It's a withdrawal that they made. They're the owners of the business and they're making, a weekly withdrawal for personal use. Okay, now what are we going to do? We're going to calculate the OASDI tax. Okay, now once again, we're going to use the Excel formula, which is going to be equals, and then I'm going to do round. Okay, open parentheses. I'm going to do the 700 times my 6.2%. Okay, and remember, I need to anchor my rate of 6.2%. I want it to always multiply by 6.2%. That's R2. I'm going to put my cursor in front of the R. I'm going to press F4. That puts the dollar signs and that anchors my formula. And then I'm going to go back to the formula bar on the left top corner, and I'm going to click the formula bar, and then I'm going to say how many digits do I want to round. I want to round to 2 digits. Then I'm going to do OK. Okay, that gives me 4340. Okay, once I'm done there, my formula is equal round. I multiply Q4, which is my 700, times my R2, which is your rate of 6.2%, and I am rounding to 2 decimals, and that gives me 4340. Once I've done that, I click on the cell. I select the bottom right corner, and I'm just going to drag it down. Okay, and that will give me the amount. Did I enter something wrong? Let me see. 700. Oh, okay, let's see. We have something going on here with this employee, with Nicole Norge. Okay, so that is correct. Okay, so Nicole, this employee gets paid per week, but this employee gets paid per month. $29.80 per month. Let's see how much that is. $29.80, and we've got 12 months. Well, that does not make sense. Okay, because what is it doing here? Okay, they want us to compute the weekly pay. So I need to convert that to my weekly pay. Okay, I was like, why am I off? Well, because based on the information given, we have to compute the amounts listed below for a weekly payroll period. So because that employee was given to us on a monthly scale, I need to convert that to a weekly scale. So how am I going to do that? So let me go ahead and I'm going to convert that down here. So this employee gets paid $29.80 per month. Okay, and then we know we have 12 months. Okay, that's going to give us $29.80 times 12 months, $35,760. Okay, and I know I'm going to divide. We have 52 weeks in a year. Okay, so I'm going to divide by 52 weeks. That's going to get me $687.69 per week. Okay, $687.69. Okay, so now that's going to be my weekly pay, $687.69. Okay, so I'm going to change this to, well, I can just leave it as is. So now I know that he makes $29.80 per month, but the weekly earnings is $687.69. Okay, why? Because right here it's per month, but they're asking us to calculate on a weekly basis. Okay, so my taxable earnings for the week are 687.69, and that's the only one that we have to make an adjustment for, because that's the only one that's valued in a month. All of the rest on a weekly scale. So once I change my 687.69, my tax changes right there, which is awesome. I was like, that did not make any sense. Okay. For your HI taxable earnings, it's going to be the same amount. It's going to be your 700, your 687.69, your 485, and then 00. You're going to do equals. You're going to do round. You're going to multiply your 700 times your 1.45%. I'm going to anchor my 1.45%. I'm going to put my cursor in front of the T2, which is the 1.45% cell. Press F4, and then I'm going to go ahead and go to the formula bar, and I'm going to round to 2 decimal places, and then do enter. Okay. Once you've done the formula, let's look at the formula once again. It's equals round S4, which is your weekly pay of 700, times your 1.45%, which is your HI rate. You're going to multiply it, and we're rounding to 2 decimal places. Okay. Sorry, the phone's ringing. I'm sorry. I apologize. Okay. That's $10.15. Okay. Once the formula has been entered, which is equals round times the taxable earnings times the rate, I can just click on the cell, click on the cell. On the right bottom corner, there's a little green box. You're going to grab it and drag it down. And that's going to calculate your taxes. Okay. And then once we've got that, we can get our totals. Okay. To get the totals, it's just equals sum, open parentheses, highlight everything in that cell, and then it'll give you your total. Okay. Once you've got that formula down, you just click on that particular cell. There's a little box again. You're going to drag it to the right hand side, and it's going to populate the sum. Okay. So we've got total taxable earnings for OASDI of 1872.69, OASDI tax of 116.11, HI taxable earnings of 1872.69, and then HI tax of 27.15. Okay. The key here is to know that the partners are not considered employees, and those $950 are not wages, but rather they're considered a withdrawal. Okay. And then remember, just like I forgot, don't forget to make that modification for Nicole, because Nicole is on a monthly basis, and we are being asked to calculate on a weekly payroll. Okay, so we have to convert her monthly pay to a weekly pay, which was a 687.69, which is what we entered right here for the taxable earnings for OASDI, as well as for your HI taxable earnings. Okay, so that number is going into those two, because we have to convert from monthly to weekly. Okay, so that is what we have for the top part. We've got our taxable earnings as well as our tax. Now this is the amount of tax that is going to be deducted from the employees. Okay, we're looking at the tax. That is the amount that is going to get deducted from the employees' paychecks. Okay. Now the employer is also responsible to pay the taxes. Okay. So how do we calculate the taxes? Well, we're going to get the total taxable earnings, which is 1872.69 times 6.2%. And let's see what that gives us. 1872.69 times 6.2%. That gives me 116.10678. And we have to round. Okay? We have to round up. So then that would be 116.11. Okay? 116.11. Okay? Very important. You always look at that third digit. If it's between a 0 and a 4, you keep as is. If it's a 5 or greater, you round up 1. Okay? So that third digit will always let you know what needs to happen to the second digit. Does it stay the same, or does it go up by 1? For the employer's HI tax, it's the 1872.69 times the 1.45%. And let's see what that gives us. 1872.69 times 1.45%. That gives me 27.154 because that's a 4, then I'm going to keep the 5 as is. So it'll be 27.15. Okay. So that is the amount that the employer has to contribute for the OASDI and the HI tax. Okay, based on the weekly earnings of $1,872.69. Okay, so two things to notate here when you're working out this problem. The partners are not considered employees, so their wages are not subject to OASDI and HI tax purposes. And look out for those employees that get paid other than weekly. In this case, we have one employee that gets paid monthly. We have to always convert that pay to a weekly. Okay, so you need to figure out, how do I get that to be able to calculate how much I made in a week. Okay, so it's very important that you read the problem carefully so you don't skip stuff like that. I skipped it right now. I had not read that they were asking for weekly payroll information. Okay, so that is basically it for this particular problem. If you have any questions, please don't hesitate to reach out to me. And until next time, thank you very much.